Welcome back to Explain the Charts. Today, we're diving into the USDJPY currency pair, analyzing the news, and breaking down the technical charts to give you a comprehensive picture of this dynamic market. Starting with the daily chart, we see that the USDJPY pair has been trending lower since the beginning of August, with a significant drop in price action around the middle of the month, suggesting a bearish sentiment. This downward trend appears to have stalled around the 144.00 level, which has acted as support for the pair in recent days. If we look at the historical data, we can see that this level has held strong in the past, indicating that it could be a significant support area for the USDJPY pair. However, we also see a clear resistance level at 146.00, which has capped the USDJPY price action over the last couple of weeks. This resistance level has been consistent, indicating that it could be a challenging area for buyers to overcome. The recent Google search results for USDJPY show that the Japanese yen has been gaining ground against the US dollar. This trend can be attributed to the differing policy outlooks between the Bank of Japan, BOJ, and the U.S. Federal Reserve, Fed. The BOJ is expected to continue its ultra-loose monetary policy stance, potentially through a rate hike that would mark the end of 7 years of negative rates. This shift in policy, combined with the recent geopolitical tension in the Middle East, is likely fueling the yen's strength, further contributing to the downward pressure on the USDJPY pair. Let's zoom in on the 1-hour chart to get a closer look at the recent price action. Here, we see a more volatile environment, with the USDJPY pair fluctuating between the support and resistance levels we identified on the daily chart. The price action is currently oscillating around the 145.00 level, which could indicate that the USDJPY pair is stuck in a range. If we look at the past few days, we can see that the pair has bounced off of both the support and resistance levels multiple times, further supporting this notion. This range-bound behavior can be frustrating for traders, but it also presents opportunities for those who are skilled at identifying breakouts and trading the range. A breakout above 146.00 would be bullish, while a break below 144.00 would be bearish, setting the stage for a potential trend. For short-term traders, it's crucial to pay attention to the 15-minute chart to find potential entry and exit points. The 15-minute chart often shows a more granular picture of the market, revealing quick price fluctuations that could be exploited for quick profits. Let's narrow down our focus on the 15-minute chart to the last week's data. This period shows a high level of volatility, making it ideal for scalping and day trading. We can see that the USDJPY pair has experienced both bullish and bearish reversals within this period, indicating an indecisive market. During this period, the 145.50 level has acted as both support and resistance, while the 146.00 level has served as resistance. These levels are worth watching closely for potential short-term trading opportunities. The recent price action has been relatively flat, suggesting that the USDJPY pair is consolidating and may soon break out of its range. A breakout above 146.50 would be bullish, while a break below 145.00 would be bearish. We need to watch closely for breakout signals to capitalize on these opportunities. In summary, the USDJPY pair is currently caught in a range, with support at 144.00 and resistance at 146.00 on the daily chart. The recent news and events suggest that the Japanese yen is likely to continue gaining strength, which could put further downward pressure on the USDJPY pair. However, the 1-hour and 15-minute charts show a high level of volatility, with the pair bouncing off of both support and resistance levels multiple times. This suggests that the market is indecisive and may soon break out of its range. A breakout above 146.00 on the daily chart, 146.50 on the 15-minute chart, would be bullish, while a break below 144.00 on the daily chart, 145.00 on the 15-minute chart, would be bearish. Traders should pay close attention to the 15-minute chart for potential short-term trading opportunities. It's also important to watch for any significant news or events that could impact the USDJPY pair, such as changes in policy announcements or geopolitical developments. Remember, this is just a technical analysis and the market can be unpredictable. It's always advisable to consult with a financial professional and conduct thorough research before making any trading decisions.